Hey guys, it is Julie here with JT Wealth. In today's video, we're taking a look at 3 stocks that have buy ratings from some of the highest rated analysts out there. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we're looking at 3 different companies that all have strong buy ratings. But the best part is that those ratings come from some of the highest rated analysts out there. So in today's video, we're going to take a look at each of these companies, what exactly they do, and what price targets analysts are predicting for this next year. Just before we get into those 3 stocks, this is just your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the great links in the description, which includes a link to one of my favorite resources, TipRanks. Now, their free plan comes with a lot of great information, but their premium and ultimate tools are fantastic and help you see breakdowns of what exact analysts have given ratings on these stocks recently. So if you're thinking about signing up, make sure you use that link to let them know that I sent you. Now we have a great variety of sectors that we're covering today. We'll be looking at a semiconductor related company, one in the software realm, and a pharmaceutical. So we're going to start off with that semiconductor related company, and that is ACLS Technologies. ACLS Technologies trades under the ticker ACLS and is currently at $36.60 per share, down about 6% this morning, as most everything is in the market. ACLS is focused on accelerating semiconductor innovation, and they have been a global leader in technology development and manufacturing of ion implant systems and services for the semiconductor industry for over 40 years, serving an estimated $1 billion ion implant systems market. They have global infrastructure supporting customers in 31 countries and a strong IP portfolio with over 800 patents. They also recently received praise from Forbes, who named ACLS on the list of America's best small cap companies, ranking them number 19 out of 100. ACLS is targeting a $650 million business model. And behind the growth for that target is their Purion product, as they just introduced new Purion products that solve high-value, high-impact implant challenges that will drive customer, employee, and investor satisfaction. And just yesterday, they announced that they have shipped the second Purion XE Max high-energy evaluation system to a leading foundry in the Asia-Pacific region. The Purion XE Max will be used for CMOS image sensor manufacturing. Bill Bintz, the Executive Vice President of Product Development, explained, "We are excited by recent evaluation shipments of the new Purion product extensions that will increase our footprint and drive ACLS towards our $650 million target business model. Strong growth in the image sensor market continues to drive robust demand for high-energy implant." Covering the ACLS stock for Needham is analyst Quinn Bolton, who is rated number 2 out of over 7,300 analysts on TipRanks. He says that we are more confident about the strength and visibility of WFE or water fab equipment in 2021 and now expect the company to reach $500 million revenue for the full year. We also raised our 2022 estimates and now believe ACLS will reach its $550 million revenue target in 2022, driven by 2 consecutive years of DRAM WFE growth, continued strength of mature nodes, and share gains. Bolton isn't the only analyst with ratings on the stock, as there are 4 others who also concur with a buy rating, making the ACLS stock come in as a strong buy with an average price target of $46.80 for a potential upside of nearly 28% over this next year. And what's great to see is that Quinn Bolton was not the only 5-star analyst on there, as all 5 of the analysts with ratings on this stock boast a 5-star rating. Now, the highest price target we have on there comes from Craig Ellis at B. Riley Financial, who gives the stock a $58 price target for over a 58% potential upside. From semiconductors, we're going to move over to pharmaceuticals with TFF Pharmaceuticals. They trade under the ticker TFFP and are currently around $14.85 per share. Now, TFF Pharmaceuticals is pretty neat as they are focused on their patented thin film freezing or TFF platform, which makes it possible to turn more molecules into inhalable therapies. This novel technology provides high absorption and yield, uniform particle size, a gentle process, and endless possibilities. TFF addresses the problem that typically only 10% of oral drugs reach their intended target, especially in the case of the lungs, and these often contain bulking agents, fillers, and high dosages contributing to unwanted side effects. This results in low efficacy and an increase in adverse events. Their TFF platform has shown the ability to deliver precise dosages to the site of action, increasing therapy response time and reducing side effects. TFF has 3 product candidates under development and in the clinic, and 3 strategic transactions completed. They expect 2 NDA filings within 24 months at a clinical and developmental cost of approximately $27 million to address multiple billion-plus markets. Just a few days ago, TFF announced some positive preclinical trial results, and that was in collaboration with the United States Army Medical Research Institute of Infectious Diseases, and they obtained positive preclinical in vitro efficacy data from TFF-formulated biodefense countermeasures. This is part of the 3-year cooperative research and development agreement that the 2 companies entered into back in April of 2020 to further research into countermeasures against biological warfare. Covering the TFF pharmaceutical stock for H.C. Wainwright is analyst Ram Selvaraju, who is rated number 3 out of over 7,300 analysts. For one of their candidates, he expects TFF to kick off phase 2 development in the first half of 2021 and anticipates top-line data in mid to late 2022. This could lead into a phase 3 study also next year or an NDA filing if the pivotal program is determined not to be required by the FDA. For the second candidate, a phase 2 program could begin sometime this year with the possibility for data readout in 2022. If phase 2 data is sufficiently impactful, a phase 3 program might not be required. So he believes that the company could launch both of these candidates in 2024 and achieve profitability in that year. He says that we are convinced that there is still substantial upside potential with respect to its most advanced clinical stage candidates and that the company's early stage pipeline and platform applicably remain underrated. TFF Pharmaceuticals comes in as a strong buy with 3 buy ratings, and the average price target is $28.33 per share for about a 90% potential upside. And once again, this comes from 5-star rated analysts across the board, with the most recent coming from Ram just yesterday, and our highest price target coming 4 days ago from B. Riley Financial with a $36 price target for about a 142% potential upside. Now, last but certainly not least on our list today is the software company AVLR. Trading under the ticker AVLR, they're currently priced at about $153 per share. AVLR is a platform that automates the major steps of tax compliance, all in the cloud. They assist with everything from sales tax, custom duties and imports tax, to goods and services tax. And AVLR solutions work across the applications that already manage your transaction data, with over 1,000+ signed partner integrations. Earlier this month, AVLR announced 10 newly certified integrations into business applications and 22 new marketplace customers. On top of this, AVLR announced in December that it will be acquiring the German tax software firm Imposia. The financial terms were not disclosed, but Imposia brings additional international tax know-how, access to Europe's largest economy, and a workforce of 50 people, which are now all assets for AVLR. And covering the AVLR stock is the number 1 rated analyst on TipRanks, and that is Piper Sandler's Brent Bracelin. He sees the Imposia acquisition as a strong move for AVLR in adjusting to the European compliance scene. New e-invoicing laws could emerge as a regulatory catalyst. Several European countries have plans to modernize the 20-plus-year-old VAT system with intent to move to digital invoicing and real-time reporting. Imposia acquisition serves as a key digital bridge into tax authorities. The acquisition of a German software firm that is expected to close during the first half of 2021 has the potential to emerge as a new vehicle for AVLR to capitalize on all these new e-invoicing laws. He believes that the international sales are AVLR's next leap for incremental growth. And Brent isn't alone here, as there are 11 analysts in total with ratings on the AVLR stock. and it comes in as a strong buy based on 10 buy ratings and 1 hold. The average price target is $209 per share for about a 36% potential upside. And once again, we have a lot of 5-star analysts on the board here. Our most recent rating comes 4 days ago at $210, and our highest rating comes in at $220 for just shy of a 43% potential upside. So there we have 3 strong buy stocks rated by some of the best analysts out there, and all with some considerable growth in their future. Now you guys know I always love hearing from you, so make sure to leave your thoughts in the comments down below. Which out of these 3 caught your eye the most, and what others are you watching in the market lately? Of course, keep in mind that these videos are never a suggestion to buy or sell any specific stock and are just meant for information and entertainment purposes. Any investment decision needs to be made based on your own research and due diligence. If you made it all the way to the end of today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a fantastic day, and cheers.